Oh no, the markets are crashing! Gold is plummeting, silver too, and Bitcoin is tanking! This is a total disaster! Everything is down! I can't watch this anymore.
Hey everybody, welcome back to the channel, and here's my first ANDIKA Bulletin video for calendar year 2026. Tell you what, it's been a big start to the new calendar year, particularly if you've been watching the precious metals, gold, silver, and of course, you know, what's been happening with Bitcoin. But with gold and silver, wow, did we see some incredible run-ups in both of those two precious metals. And then on Friday the 30th of January, boom, we had a little bit of a correction happening. And you're probably wondering what happened. Well, for starters, here's the chart of gold, and it's obviously easy to look at this with the benefit of hindsight because we've had the correction come Friday. But when something can run as strong as gold's run, and for that matter, as strong as silver has run, you need to start pulling back, saying, hang on a sec, this is just getting a little bit crazy. It was inevitable something was going to force some form of correction at some point. The question was, what would it have been the trigger? Well, it seems the trigger was when Trumpy announced this fella here, Kevin Warsh, is going to be nominated as the new Fed chair. He's going to replace Powell, I believe, in May. Now, this guy is known what they call a hawk. It means he's very focused on the inflationary aspects of the market, whereas the doves are more on an employment side. And it was the trigger needed that the market thought, oh, he's going to put a hawk guy who's going to really focus in on inflation, and maybe that could mean the rate of rate cuts in the US will slow down. And obviously if rate cuts slow down on that basis, or potentially even go up, then that might rechange and the dollar might go up. That's the US dollar might go up, and then hence why are we buying gold and silver? One of the big reasons people were into buying gold and silver was on the debasement of the US dollar, meaning the US dollar is losing its value. So if you want to hedge against the loss in that value, you buy something like gold or silver, because they're not, nominated in US dollars. And then of course Bitcoin also fits in that as well. Now, we saw that then as the narrative of why the market, it had its correction. Here again is the price of silver. Silver, just to give us an idea, what did she do? She got up to nearly 117, and she corrected down to about 84 and a half. And that was like a 27, nearly 28%, hit in that price there. And we can see here the relative strength index has really come off from those highs of being around 83, now down to about 47. I suspect there might be a bit of a bounce coming back into silver and obviously into gold as well. But these falls were very big. You take that one I mentioned in silver being nearly 28%. Why did it fall 28%? Well, no one will know precisely. It's not like someone works out, I'm going to make it fall 28. But you had a catalyst on the basis of that new guy being nominated as the new Fed chair. That was the excuse the market wanted to hit the sell buttons, and then it starts to fall. And if we just zero into that particular fall, we can see, it started off up there, fell, went back up to 117, and then started falling and falling and falling and falling. It wasn't like a vertical cliff face drop, even though it's still a very severe correction that we can see. It still happened in bits. And I suspect then it was made worse when the CME group, who basically runs COMEX, who's the metals exchange, they also then decided, because they've seen market action happen, let's now increase the margin requirements on maintaining a gold and or silver position. And by putting up those margins, that would have sort of fed into the speed. It's like putting it into another gear. We've already seen price starting to come off. You're watching it going, oh my God, it's starting to fall. And then you get the email or your broker tells you, hey, Andy, we're moving up the requirement on your margin. And what COMEX did was on silver, it went from 11% to 15% if you were what we call non-heightened, and it went from 12 to 16% if you were heightened. This is this funny rule they use about how they designate client accounts. It's just how the broker assigns you. So that's a big increase, and gold went from about 6.6% to 8.8%. That's material, and then that then feeds. Oh, margin requirements are up. Great. Okay, what am I going to do here? Oh, I might have to liquidate some of my gold now or silver just because I need to cover that. Not everyone's endless money, so you're selling into a falling market, and that exacerbates, and then it just becomes its own momentum doing that. With Bitcoin, if we go over to that particular chart. Now, Bitcoin's been a really disappointing trade since October of last year. That's when she peaked. There it is there. I think it's the 20th. I got the 7th of October. I thought it was around the 26th. Anyway, whatever it was, you can see it's just corrected. Lots of hits along the way, but look at this relative strength. We're on the daily. It's really oversold Bitcoin, but Bitcoin's also been suffering from a lot of things. Remember, Bitcoin trades 24 hours a day. It's like nearly an ATM. So if you take what happened on Friday with your metals, let's say you had a big position in gold and silver, you're watching it starting to fall, you then have to cut out your position a little bit just to manage, because you're going to get margin called, particularly on Monday. You're preparing for that on Monday, so you might also have a Bitcoin position or an Ethereum position, so you just sell out. And then that's piling into that as well, because remember, they are able to trade 24 hours a day, 7 days a week. And then, of course, the metrics in the crypto market are very good at identifying who are big holders, and we can see who, well, not so much we can see that there's people who we know they've got degrees of leverage and all that sort of stuff. But in the gold space, some of the big buyers that obviously are buying gold, for example, are sovereigns. They don't worry about margin calls at all. They just keep gobbling up like Pac-Man. It'll be the fringe traders that are trading on the side, and they'll have their margin requirements. But then you go back to the crypto market. There was a story that there was a trader who had a big Ethereum pair. He was leveraged long. He was on the exchange hyperliquid, and because Ethereum was falling, they just forcibly closed that particular whale out. I'm not exactly sure to the extent of what they've lost, but it's reported over $200 million. Someone in the comments might know and be able to put that on there. And they were leveraged presumably 4 maybe to 5 on that position, and that's also made crypto even worse in that sense. Plus, people know that in the crypto space we've got strategy, and then you got Bitmine, and they're your big treasury companies that are holding a lot of both either Bitcoin in terms of strategy or Bitmine in terms of Ethereum. And we know that what they own, because they publicly tell what they own, but they've obviously borrowed money to buy said Bitcoin or Ethereum. So the market's watching also for the fact that could they be put into a squeeze scenario where they become a bigger force seller. So markets anticipate the possibility of that by selling down essentially a lot more than what it should do. But again, that's the relative strength here we can see in Bitcoin, very, very much down and out. We're talking probably around about 25 on the RSI, so that is severely oversold. And then we go to Ethereum, pretty much in the same boat there. We're probably looking at about 28 there as well. Whereas with gold at the moment, it's still coming down. It's coming to the medium sort of area, not so much oversold. So look, that's 8 and a bit minutes just quickly to explain it. Hopefully I've been able to explain what's been going on. We were seeing these massive moves in gold and silver. They were based off the fact of debasement in the US dollar, or people losing faith in the US dollar. Therefore, they're buying into this, and it just became on itself. A lot of leverage got involved. There was the excuse of Trump nominating a new Fed chair. Bingo, that's the excuse. The market's used it. It's now starting to sell some positions. As that was happening, a few hours later, the various exchanges start to increase the margin requirements. That further pushes it, makes it a little bit more severe. Obviously, the precious metal markets close when we come into the weekend. You won't be able to trade them, of course, but then if someone's really short collateral cash, then they know they need to pony up come Monday. They might go to their ATM, which is Bitcoin, and they sell that down. That gets more aggressively sold, etc., etc. So it's these sort of things that can happen in markets. You just got to sort of hold your nerve. If obviously you're in a position to be a buyer and you're of a belief that gold's where you want to be, and silver's where you want to be, or Bitcoin's where you want to be. I'm not trying to give anyone advice on trying to time anything, but if it's the sort of thing that you're wanting to accumulate more of, obviously prices now look a lot better than what they did last week. I myself always employ a dollar cost averaging strategy where basically once a month I have a small amount of money and I just pick up a bit more Bitcoin. I'm just buying a little bit here and there, but I'm not leveraged. So when these big events happen, I'm not ever going to get flushed out because I don't borrow money to go and buy said Bitcoin. And I've also got a position in gold as well, and same thing, not leveraged in there as well. But you just take that into account. But you need to know and have your eyes open that when you see these big parabolic moves, particularly in things like gold and in silver, I mean, there's that chart there. That is just phenomenal how something like silver can run up. And remember, silver has a lot of industrial uses. And, there's talks that SRAM that we need for memory and all that, there's going to be a global shortage potentially in the next couple of years. It's in a lot of circuitry. Remember, silver as a metal, you can turn into a paste and it can still have its conductivity in terms of moving electrons, meaning power. And silver's got a much higher melting point than gold, so that's why it's a very useful metal in industrial use. It's in solar panels, it's in a lot of stuff. So there's big uses there. And of course, being a metal that was at the point, was costing only, today right now we're retrading, it's about $81 US versus, gold at 4,800. It's a lower base, so it's more interesting for people to trade against. So there's all these other machinations. Anyway, I'm sort of rambling a bit now just to make a video, which is a little bit silly. So hopefully you've got something out of this, and we'll just have to watch with keen interest. Until next time, take it easy, and we'll catch you on the next video. See you later.
Thanks for watching this ANDIKA Bulletin. Please like the video and think about subscribing to Andy's channel. Take it easy and see you soon.